Did you know that by 2025, hundreds of major stores in the United States will close their doors for good? From historic department stores to pharmacy chains and discount stores, the retail industry is going through a huge change. Things like the rise of online shopping, the increase in operating costs, and the drop in people visiting malls are forcing giants like Saks Fifth Avenue, Penney, Rite Aid, and Family Dollar to close stores across the country. And that's not all. Some companies are facing bankruptcy, others are restructuring their business model, and many are choosing to focus on digital sales or smaller, more efficient stores. In this video, we'll tell you which stores are closing, why they're closing, and how this trend could change the way we shop forever. But before we continue, we invite you to subscribe to our channel, Financial Legion, to keep watching awesome and important content like this. Let's get started. During the month of May, many stores in the United States will close permanently, as several companies face bankruptcy or other circumstances that force the closure of their locations. Throughout 2025, hundreds of stores in the United States will close their doors, and many of them will do so in May, according to information gathered by Newsweek. This wave of closures ranges from long-standing department stores to discount chains and pharmacies, showing significant changes in consumer habits and business strategies after the pandemic. Among the stores that will close are well-known brands like Saks Fifth Avenue, Penney, Rite Aid, and Family Dollar, according to data from Newsweek, USA Today, Bloomberg, and CNN. The main reasons behind these closures are the growth of online shopping, the rise in operating costs, like rent and salaries, and the drop in customer traffic at shopping malls. The closure of stores is not only due to specific financial difficulties, but is part of a broader restructuring of the retail sector. According to analysts quoted by Newsweek and Bloomberg, many companies are choosing to reduce their physical presence and focus their efforts on digital commerce or smaller locations. This transition, driven by the increase in operating costs and the reduction of customer flow in shopping malls, is expected to persist throughout 2025. Saks Fifth Avenue. Goodbye to Union Square. Saks Fifth Avenue will close its iconic store in Union Square, San Francisco in early May. After the lease expires, a spokesperson confirmed to ABC 7 News. The company explained that the decision is due to changes in consumer habits and the evolution of its real estate strategy. Despite the store closure, Saks will continue to serve its customers at other nearby branches and through its digital channels, according to statements reported by Newsweek. Penney. 7 stores are closing. Penney reported that it will close 7 of its stores before May 25th in cities like San Bruno, California, Denver, Pocatello, Idaho, Topeka, Kansas, Newington, New Hampshire, Asheville, North Carolina, and Charleston, West Virginia, as reported by USA Today. Initially, the closure of its store in Annapolis, Maryland was also planned. However, an agreement to extend the lease will allow this store to continue operating at least until August. Although the company claims not to have planned a significant reduction in its store network, these specific closures are due to expiring leases, market variations, and other reasons, according to a spokesperson who talked to USA Today. Rite Aid, heading towards a new bankruptcy. Rite Aid Corp. is heading towards a second bankruptcy in less than a year, and plans to sell some of its stores while liquidating others, as reported by Bloomberg. The chain, which has already closed hundreds of locations in 2024, is seeking financing to stay operational during its restructuring process. According to Bloomberg, the company is facing serious economic difficulties due to decreased consumer spending, rising costs, and various lawsuits related to the opioid crisis. Family Dollar. Sale and continued closures. Family Dollar, which has about 8,000 stores in the United States, will be acquired by investment funds, Brigade Capital Management and Macellum Capital Management, for a value of $1 billion, as reported by CNN. This sale comes after years marked by operational problems, poor management, and increasingly intense competition in the discount store segment. In 2024, the closure of more than 900 stores had already been announced, and this trend continues in 2025, according to CNN and WFMJ. Analysts quoted by WFMJ explained that the loss of appeal among consumers and strong competition in rural areas have influenced the decision to continue closing more branches.